So I think first of all, you've got to consider, what is the utility of Bitcoin versus, I guess, other crypto assets out there. And Bitcoin's utility obviously predominantly has been as a store of value, potentially as an inflation hedge, and obviously as some form of currency for the internet. When I think about what's happened over the last 3 to 4 weeks, it's probably been building up over the better part of 2021, and that's really the inflation story in the US, some of the supply constraints that we've witnessed, and whether the Fed was going to eventually react to effectively these inflation prints. What we saw through December and early part of January is very large inflation prints. The Federal Reserve effectively changing its stance on inflation being transitory and moving to the fact that this inflation could be here. We saw a lot of supply constraints actually weaken out of the market, but inflation not go away, and look towards positioning, at least from a Federal Reserve standpoint, around raising rates. The first thing to consider is what's the utility of Bitcoin. It's important to understand there's a big difference between Bitcoin and a lot of the other crypto assets out there in the ecosystem. The second part of this question really relates to what's happening in the macro environment today. In the last 4 to 6 weeks, there's been a big macro shift, predominantly in the US, where inflation has started to be recognized as no longer being transitory. The Fed has obviously come out and changed its stance on this and has really reshaped the market between effectively growth and value stocks. And what that means is they're really looking at raising rates in 2022 to try and stifle inflation that has started to really creep out of control, well north of 8% in some regions in the US. Naturally, there's a flow-on effect about raising rates. You raise rates in the US, obviously all sorts of hard assets, whether it's commodities, real estate, or things like Bitcoin, which are often considered a hard money, but in the short term, it can obviously have some sort of negative effect because it's pegged to a US dollar. So people look at US dollar value of Bitcoin, and if US dollar is strengthening versus these hard assets, you do naturally see a sell-off. What we have witnessed in the last 4 to 6 weeks is obviously a big sell-off in tech stocks, a big shift to value shares really across stock markets around the world, with this Fed shift on transitory to what we would now say persistent inflation. Bitcoin being somewhat of a leader in this space is, as being a bit of a risk asset, has felt some of the brunt of this selling. Now, our view of this is slightly different. I think there is short-term negative impacts of the US recognizing that inflation isn't transitory. I actually think medium to long term, it's actually very, very bullish Bitcoin, because as I stated at the start, Bitcoin's utility is a core thing to understand. A lot of people consider it to be a store of value, effectively gold 2.0. Whether it's a gold or it's another currency, the hard reality is it's a harder money. The fact of the matter is that US dollars are really the ultimate supply is controlled by the Fed, whereas with Bitcoin it's controlled by code and it's finite supply. So in environments where we effectively are creating inflationary environments, naturally over time harder assets or harder things like Bitcoin should appreciate in value, and actually their true value attributes like being a store of value should see them rise in value over the medium to long term. Well, it's a pretty broad question to ask, right? It depends on what are you sort of using the stock market for versus crypto assets, right? I think crypto assets are naturally disruptive. I think there is a lot of use cases for different types of protocols out there which are going to cause significant disruption to traditional centralized businesses, whether it's banks, stock exchanges, law firms, that we'll start to see over the next really 3 to 5 years. It's not going to be overnight, and I think a lot of these centralized organizations will try to avoid their own Kodak moment and try to work out how they can become active members in this decentralized economy. I don't think all of them are going to be sort of shifted to the side. But naturally, when I look at whether you'd be allocating capital to the stock market, allocating capital to crypto, it depends on what your overall investment objectives are. And part of that also is the fact that if you're investing in the stock market, obviously you're investing in equity. And a lot of companies out there that are listed on the stock market are heavily exposed to the crypto space. Obviously things like Coinbase, MicroStrategy, a lot of the Bitcoin miners that are obviously listed and really are an infrastructure play for crypto, or you could invest directly in crypto assets in token format. If you invest in the token format, there's different ways to obviously extract yield rather than just general dividends that you expect from a share. You can obviously stake them, yield farm assets, do a range of different things with them. So if you understand it, you can probably generate somewhat better returns in this space, but it's also, there's still risks that need to be considered, and you need to have a pretty strong understanding of the operational controls that you want to have in place to ensure the safety of your underlying assets.